So today I have as a guest Arlen Shirvanian from Connect Commercial, and Arlen's going to be talking to us about finance related to commercial properties. And hopefully he's going to shed a lot of light on how the system works, what people need to know, and what our viewers can benefit from his years of knowledge. So Arlen, can you do us a favor and introduce yourself?
Thank you, Alan. Thank you so much for having me on. This is my first podcast
Nice.
in the age of podcasts. So thank you so much.
Absolutely.
My name is Arlen Shirvanian, founder of Connect Commercial Inc. And Connect Commercial is basically more of a consumer advocacy company than anything else. We help bridge the gap for commercial finance for a lot of people out there, whether it's SBA owning their first commercial property or helping manage their real estate portfolio. That's what Connect Commercial is. My background, I was in commercial banking for the past 15 years, multiple institutions. I tried to pick up different ways of structuring deals from all the different banks that I've worked at, understand the intricacies of how to structure a deal and get it done. You could walk into any branch in this country and ask for a loan. The odds of you getting it are going to be higher when you work with someone that has done the loans before. And
Knows the
that's where we
system,
come.
right?
That knows the system
Right.
exactly and knows how to present your deal to them so that it gets accepted when it's underwriting. So
Okay.
basically, Connect Commercial, we're a consulting company that helps people with commercial loans.
And so you guys don't do any residential loans, right?
No, I'm going to leave that up to our mortgage loan officers out there. There's a lot of great ones,
Right.
and those guys are amazing. But we are strictly commercial, SBA, and investment properties from units 5 and up.
That's great. So that's the same thing I tell people with commercial real estate, like brokers, right? I mean, real estate is a very diverse playing field, and residential guys and gals really know what they're doing. But commercial people really have a better understanding, I think, of the commercial area, right? I mean, how the financing works, what to look for in terms of cash flow and all those other things. So it's better, I think, for the client, for the consumer to really go for a specialist. It really helps. You don't want a jack of all trades in real estate.
Almost in anything. It's
Right.
like well, if you have a Porsche, you're not going to take them to a Ferrari mechanic or a Honda mechanic. You're going to take them to a Porsche mechanic. Same thing with a doctor. You have your primary physician that's going to guide you to the specialists, and there's a reason for that because every industry has its own little t- things that make it different. And there are things that work in residential that don't work in commercial, and there are things that work in commercial that don't work in residential. Different guidelines and standards. And you want a specialist that'll guide you through all of that. And Connect Commercial is that. Is just we're just a specialist when it comes down to commercial loans. And anything else, we have great partners that we could recommend you to that will help you facilitate any other loans that you have.
Great. So you guys work on apartment buildings, 5 units and up, retail centers, hotels, anything, right? Industrial warehouses. I know we've worked on a couple deals together in
Yeah, we worked
industrial.
on a couple of deals together. They were industrial. I do work on multifamily properties, typically 5 units and up, mixed use properties, retail, industrial, specialty use, car wash, gas stations. We could do all of those. In addition, I also do SBA financing, working capital, which part of the education that I have, it's something that I love is what got me into this game is my passion for business. Ever since I was a little kid, I was obsessed with Nike, and once you read Shoe Dog, you even understand that even Nike got kicked out of the bank that they were with, and they had to find a different bank. And I'm pretty sure they used someone like me at Connect Commercial. So,
Absolutely.
but yeah, you working with a specialist is important for anything that you do.
Absolutely.
You
That's
know,
true. So I like to start kind of the big picture. Everyone everyone hears the news. Everyone's hearing, oh, the real estate market, it's not doing so well. There's a lot of problems going on. But I think people confuse the commercial real estate market, right? There's different sectors. Office, we all know, isn't doing so well right now. There's a lot of problems with people working from home. But there's other sectors that do really well. I know in terms of my experience with multifamily and industrial, it's still doing well, especially in Southern California. So what are you seeing out there in terms of lending with finance with these asset classes?
Yeah, so cash flow and value, those are the two things that we want to talk about in a rising rate environment. Um, the cash flow doesn't support the values that are are out there right now. So it's getting harder in a sense where qualifying for the loan isn't the same way that they were qualifying for when the rates were low. It's a lot less that you qualify for. So does that mean that it's hard? No, it just means that you're not going to qualify for $1 million. You're going to qualify for $500, for $500,000. It's a perspective, but people want to label like, oh, it's harder to get a loan. No, it's harder to qualify for. It's difficult to qualify for a larger loan, and it's much more easier to qualify for a smaller loan. So what happens in the commercial world is that these loans come to maturity, and when they come to maturity and you have an owner that's been taking the profits and not leaving it in the bank account or in the LLC that the entity is in and basically living off of it, they're not going to be happy when they're coming to refinance this loan because they're either going to have to pay down or their payments are going to go up. But more often than not, when you're refinancing a loan that's almost at term, when you refinance, your payments are going to be lower. Your rates may be higher because you're recasting this loan for another, let's say, 25 years or 30 years, depending on what type of asset it is.
And you're putting more money into it? Are you having to put more money into it?
Some
Sometimes.
depends how you're this is where the word leverage comes in and how
Right.
much down payment you put. Typically, if you put 50 to 60%, if you're a 50-60% loan to value on a property, you're gonna be fine when it comes down to refinancing.
Right.
You're not gonna have to put more money in. But let's
There's enough
say
equity in there
if there's
to,
enough
yeah.
equity in there, as long as the cash flow supports it, you're going to be fine. But oftentimes you find a lot of investors getting into deals at 75, 80%. And when it comes down to refinancing that debt, the bank's going to look at cash flow with the new rates. It's not going to qualify the same way it would. And at that point, they're going to ask you to pay down the loan in order to qualify.
So a few years ago, when money was just free flowing like beer everywhere, what was the loan to value requirements that banks had, and what is it now? Like, what's the difference that we're seeing or you're
Again,
seeing?
you if you could find a property that was cash flowing and was priced, let's say low, you could get into an investment property at 25% down.
This is
Uh,
back then,
this is back then.
right?
Now the minimum is 35%. And all banks, this is my education through Wells Fargo, JP Morgan, Bank of America. Uh, the term conventional is tied to how the economy is doing. When we're in a growth period in the economy, your down payment is going to be less for it to qualify for a conventional program. When the economy is kind of shaky as it's been, they're going to add a buffer to it. It's typically a 10% buffer, making it 35%. So that's why, more often than not, on any acquisition loan that you're doing, your minimum down payment is 35% on
Okay,
an investment property.
right. So let me ask you, let's say there's a typical person who is not experienced in commercial real estate. They're looking to purchase an 8 unit, for example, in Southern California.
Yeah.
What does the bank, or what do you look for? Do you look for that person's credit rating? Do you look for the cash flow and expenses of the property? What are you looking at in evaluating that deal?
So you want to look at the individual, make sure that they're making enough money on their own. They're not using this investment to pay for a lifestyle. And it's not going to do that, especially in California, where, there's a lot of agents out there. There's a lot of people out there, and there's a lot of pros out there that know how to price these properties right. So when they price them right, your first time investor is not going to get in on a property unless they're putting at least 50%, 60% for it to cash flow. So, um, back to what a first time buyer or first time investor should be really looking at is this is a good asset in a good neighborhood that in 5 to 10 years, it could be the anchor of my portfolio
Right. So they've got to bring in at least about 35% down
on a cash flowing property.
on a
It
cash
should
flowing
cash
property.
flow on its own.
Right,
Yes.
right. It's not losing money otherwise.
It's
Banks
not, it
not
could pay for itself.
right. And there are obviously loan closing costs. What do those typically look
So
like?
in the commercial world, if you're looking at a multifamily property, the appraisals are they range from 1,500 all the way up to, depending on the size, 5,000. And other than that, in the now you go to different asset types like a retail, gas station, auto mechanic shop. You're adding the environmental fees. These fees can range anywhere between 1,500 all the way up to 15,000, depending on the type of work needed to pass the environmental testing.
Okay. Now, let's say you are a business owner and you own a construction business. You've been leasing a warehouse for several years. Do they also need to come up with 35%, or isn't that where SBA
So
loans? Can you talk a little bit
yeah,
about that?
so here's the biggest difference. So you have investment properties. Your minimum down payment on an investment property is typically 35%. For an owner user, you could go as low as 10% down. And that's where SBA comes in, the Small Business Administration. It came out with a program that will allow small businesses to buy the building they're operating out of with a minimum down payment. And the way those loans work are they're backed by the government, meaning that the government is securitizing the loan to a certain percentage so that the banks will lend to business owners for their buildings.
Wonderful. And so that's a great opportunity for business owners, right? I mean, that's,
Absolutely.
so can you give us an idea? I know it's hard to say it has a lot to do with the individual person and the business, but what are rates, for example, if you're buying a cash flowing investment property like an apartment building versus an SBA
Yeah.
loan backed, let's say, warehouse?
Yeah, let's say it's a based on today's rates, and today is January. What day are we?
Uh,
January 20,
20th, I think, or 19th of
January 19th.
2024.
We're January 19th, 2024. Rates for multifamily on a good property, you're looking at 6.25, 6% is a good rate. And that's basically where we're at on a multifamily property. On a commercial property, right now with the SBA rate on a SBA 504 product, you're looking at a 6.39% on a 25-year fixed rate.
Okay. You know, I watch Bloomberg TV a lot and try to get a better understanding of the market, right? It's our
Yeah.
field and we need to have a sense of where the economy is going. It always astonishes me when you listen to these economists because half will be telling you one thing and the other half will be telling you something else. And it just goes to tell you no one knows for sure where things are going, right? You have a sort of an idea. If you had a magic ball right now,
Yeah.
where do you think rates are going this year? Are they going to be going lower, staying the same, higher, maybe?
All signs point to rates getting lower. So with Connect Commercial, this is what we do. We provide guidance. When we're doing a loan, we don't want long maturities. We want shorter maturities so that our clients could take advantage of lower rates down the line. And so when we're doing a investment property or a commercial property, I'd like to do something that's a 5-year term. But in a low rate environment where you can't get much lower, and you could only imagine that things are going to get higher, you want to go longer maturities, meaning a 5, 10 year fixed rate loan. And but right now, looking at from all the news that we hear, from all the data that's been out, with inflation kind of being subsided, we're looking at rate cuts, and especially this year being a election year. We're
Right.
one of the again every year is every time there's an election, it's the biggest election of all time,
Right.
and this one is definitely, you could see it in the market. It's been rallying, and we feel like there may be a different type of president coming into office. With that, you see the market adjusting to it. Rates did start to come down towards the end of 2023. Kind of subsided right now as we wait for more news from the Fed, but more than likely, we're looking at a few rate cuts coming down.
We are. And, I know Trump is a very controversial figure, but I know in the past he's spoken about uh, or he's recommended to the Fed to reduce rates. He's a very pro
Yeah.
rate reduction kind of guy, and so
He's
there is a chance. I mean, he won Ohio recently, right? And so uh, people are talking about if
yeah,
he wins, he's
yeah,
going to put more pressure for rates to come down.
yeah. Uh, exactly. Trump is pro business, and
Right.
you want a president in office that's pro business. And when you're pro business, you're going to want lower rates. Lower rates attract investors, and it allows a lot of people to fulfill their dreams. To be honest with you,
Right.
this is why the SBA program is one of the best ones out there. Earlier this year, I did one of my favorite deals that I did of all time, and I helped a manager of a business. He was a manager of a bus business, and he had the opportunity to buy the bus company that he was working for.
Wow.
And we were able to do that using the SBA product. He went from being an employee to an owner.
So you not only help with financing real estate, but also businesses as
Also,
well. It's
businesses
important
as
to know.
well. Absolutely.
Wow.
So,
It's the American
and
dream.
when we did that loan, it is. I called it the American Dream. If you saw that
Right.
post, I called it the reason why I started doing what I do is it provides social economic mobility. The SBA product out there is one of the best products out there. And you may get some, this is for people, this is a general statement for all the people out there that have SBA loans and they hear that you can discharge your loan. You can, and they won't come after you. But it's
Discharge the which loan?
the economic injury disaster loans that came out during COVID.
Right. Everyone thought it was free money, right?
Basically, the
And
free
I don't
money
have to pay
loans.
this back.
Is
It's
this loan gonna get forgiven? Oh, I didn't pay, and it's no longer there. It's no longer there, absolutely. But when you want to come, and if you're young, if you're in your 30s, and you're gonna have a entrepreneurial career, I would pay that loan because once you scorn the SBA, you can't go back to them, and it's a problem. And earlier this year, we had a deal that was falling apart because of that. Client didn't pay his EIDL loan, even though it was minimal. It was like 40 grand. He didn't make the payment on it. When it came down to him trying to get a new SBA loan, the government's all like, there's an error code on here. They don't tell you what the error code
right.
is, but the
But
error
if you work
code,
with Arlen, you will know what that error code
yeah,
is.
yeah, yeah. One of the first questions I'll
So can
ask
they
is,
go
are you
back and
current?
pay off that loan at that point, or is it too late?
It basically kicks us out 6 months at minimum
Okay.
on the deal.
Okay.
So
So delays the process, but possibly they can go back during that 6 month, try to figure out a way to pay off that loan.
yeah, go current right off the
Right.
bat. Let's start writing letters, start reaching out to regional SBA administrators,
Right.
and see what we can do to speed up the process and get you SBA ready again.
And I think just to kind of bring it back to where we started in the beginning, that's why it's so important to work with someone who has specialized knowledge, and especially
Absolutely.
like yourself, you don't just work with one bank, right? It's not just Wells Fargo or
No,
Chase.
it's not.
You work with a bunch of different banks, so you get an idea of how these banks work, what they're looking for. You can
Absolutely.
help prepare the client, right? Because not everyone necessarily has done these kinds of loans before. A residential loan person could maybe offer you, "Hey, I can get that loan for you," but if you don't do it right, it could delay the entire process, and you might miss out on the deal that may not come around again or for a long time.
Yeah. So there is a bank for everyone in this country, and it's very hard for you to know which bank is for you.
Another question for you. So, in residential real estate transactions, usually they tell the clients to have a pre-approval letter, pre-qualification letter. Is that the same in commercial? Can you let us know on
Um,
that?
for commercial, we could qualify a client, we could provide a term sheet, but it's not the same process as a pre-approval until we get into underwriting and pull credit and things of that sort.
Okay.
So it's not as quick as it is on the residential side.
And how long does it typically take to close a deal, or the loan, I should say?
So a commercial loan, I mean, you want to say within 30 to 45 days is ideal on a ideal client, full docs, they have their financial statements ready, and 30 to 45 days. But typically, it's more like 60 to 90 for anyone that's trying to buy their first property. And with that, another a comment I want to make for anyone that owns their businesses or is an investor, please have a good CPA on your side and meet with them annually. Have your financial statements, review them. It's one of those things of being an adult. You got to do it. If you want to be a
Yeah.
business owner,
Especially
have
if you
your
want to buy property.
financials updated at
Yeah.
least at least for the prior quarter, because you want to know how good you're doing. You want to know how good you did last year compared to this year. That's just you trying to be a better business owner.
Right.
And if you want to really grow, and all of us want to have a better life and leave more behind than what we came into. If you want to do all of that as a business owner, having a really good CPA is important. All the CPAs out there, I'm looking out for you. So
I had you talk about deals. I'll talk about a recent one that I had. I had two gentlemen who own a company. They've been renting a warehouse for years. They call me because every year the landlord would raise the rent about 20 to 25% every year. And he wouldn't give a long-term lease. It was just month to month.
yeah,
And they were getting frustrated because these guys are
of course.
pouring tens of thousands of dollars into the business with equipment and everything. They came
Yes.
to me, and actually we worked on the deal together, and they were able to purchase a property through with the SBA program.
Yes.
And ultimately, the payment on that loan on the new property was less than the rent that they were paying.
Yeah.
And they're building equity, and
Exactly.
in the future, they're building generational wealth. They can actually, if they ever sell the business, they can keep the property, rent it
Yeah.
out. It's a great way to, build long-term wealth. And that's,
Exactly.
real estate,
It's
that's
it's real estate, and
right.
anytime you buy a property as opposed to renting it, your operating expenses are stabilized. Things start as we experienced. Prices go up, then they don't come back down the way they went up. It's always the case. Like for gas prices go up, and then hey, I'm gonna bring gas prices down, but never down as much as it was before.
Right.
It's the same thing. When you buy a property, you've basically stabilized your rental expense for the next 25 years. At least it gives you the comfort of knowing that's what I'm going to pay next year, the following year, and the year after that. Where you're not at risk for a landlord who, by no fault of their own, that's the business, increasing your rent.
Right.
So buying your own property is definitely the way to go if the numbers make sense.
Right. And that's the advice that I give to my apartment building owners is that a lot of them are nice guys and gals, right? They don't necessarily want to raise their rent every month, but I tell them you need to every year, excuse me, but you need to raise it every year. And
Yeah.
the reality is between insurance rates going up every year, your expenses, your trash, and then laws being enacted in certain cities where during
Yeah.
COVID, they froze rent hikes for 3, 4 years. Well, that landlord has got expenses that are going up, but the income is staying the same, and then maybe sometimes going lower because they've got tenants who weren't paying during that time.
Exactly.
So, you can't necessarily blame landlords for raising rents. It's just the consequence of supply and demand and the laws that impact those decisions.
Yeah, it goes back to being an owner, the owner and labor,
Right.
going back to a lot of philosophy. But when you own a building, you have to manage it, and you have to take care of it, and you can't take care of it if you don't increase the rents. And it's a sensitive subject to a lot of people. I grew up when my family rented, so we would move because they would increase the rent a lot. So it does happen. But as a building owner, if I get a building owner that doesn't, well, what I say, manage the building properly and has kept the rents for the same price for the past 5 years, now his loan's coming due.
Right.
We can't
No,
refinance.
you can't. And insurance. In some cases
Insurance,
for
yeah.
multifamily have been going up 40, 50% a year
Oh
for
yeah,
insurance. I
yeah.
mean, that's a huge impact on your bottom line.
Big,
Yeah.
big.
So, question for you. When you've got, let's say, a building owner now who is facing a loan that's maturing within the next, let's say, 12 to 24 months, what advice do you have for them? What should they be doing in preparation?
That's where you should be working with someone like me or anyone, or have a great relationship with your bank that the loan is with, And you should be working with your CPA and making sure that that building is operating at profit, so that when it's time to renew the loan or refinance the loan, you are in a good position. Because if not, if you're using your apartment building, and I've seen this, where you're paying your car expenses, nothing wrong with that. But if you're doing that, when it comes down to refinancing the loan, you're going to have problems. You're going to have problems. You're not going to be able to get money out, or you're going to have issues where you have to pay down the loan to qualify again.
So, what does a bank look at? 2 years tax returns on the property usually, or
Typically, 2 years,
okay,
2 years, a trailing 12 months,
yeah. And
uh,
commercial loans are only they're amortized over 25 years, let's say, but they're
25, 30. Yeah, depending on what type of asset it is. Yeah.
right. But it's the payback is over eight,
Yeah. So,
7, 5, 7, or 10 years, right?
yeah,
And 10
you
is a
got
rare thing,
3, 5, 7, 10.
right?
And those are the maturities that you're looking at on a commercial loan. Um, and what does that mean is that, you have a rate that's tied to the 3 year that'll mature, that every 3 years it'll adjust, or at 3 years it's at term and you need to refinance, or you're at a 5 plus 5, meaning that on the fifth year you have the option to refinance, or the rate will adjust to another 5 year loan. So with commercial, that's where the specialist comes in, getting you into the right product for the right building, and getting figuring out where we're at in an economic cycle is super important. A lot of the loans that I did last year were 3 year loans. And the reason why I did 3 years is because I'm like, we're getting loans, we're acquiring these properties at probably the highest rates we've seen. Well, at the highest rates we've seen over the past 25 years.
That's right.
Let's time this right. Let's go
Right.
into that third year knowing we're going to be refinancing these loans, with expecting the rates to come down. And with that, we'll be able to capture some of, maybe potentially capture some of the down payment that you put in. And you're going to have, with reduced rates, you're going to have better values, and you will get better terms for the loan.
Are there usually prepayment penalties if you do pay off early, or you kind of have to plan that ahead when you're
Again,
getting the loan, right?
that's where working with the specialist. So I work with some institutions I work with offer no prepayment penalties, and
Okay.
some of them offer prepayment penalties. When the rates were low, I would use a swap product. A swap is tied to, it's a Wall Street product basically. Um, so when you want to get a swap loan when the rates are low. So when the rates are high and you want to refinance, the bank will actually pay you money to refinance the loan.
Interesting.
And but in a high rate environment, they'll probably give you better rates, but you can't refinance that loan until the rates are just as high. You're stuck with the loan until its maturity.
Do banks? I know some people are facing maturing loans. Are banks providing any kind of extension on these loans, giving people some time to figure things out, or it's not really common?
Banks will work. Look, the no bank wants to see defaults. No, but there is a point of no return. I used to work for the specialty asset groups of a bank, where basically it was the bad loans, the bad,
Right.
all the bad loans would go. Not necessarily bad loans, but people that didn't manage their buildings properly, people that didn't
Or
manage
leverage
their business
or
properly.
leverage really high,
They
right?
leveraged very high, and the maturities are coming up, and they have no exit. That's where I learned how to structure. Is I would get all the bad stuff, and I'm like, all right, Arlen, figure something out for this client, and I would figure out how to get out of these bad situations for good people. There's
Right.
nothing wrong. Like, it's a mom and pop uh, business, and they weren't sophisticated financially. They didn't pre-plan. They didn't even realize when they were doing the loan that it's gonna come up for maturity.
Right.
And maturity's here, and now they have no exit. And I would sit with them, and I would learn. Through that learning process, I learned how to structure deals, how to understand where we're at in an economic cycle, so that when you're refinancing a loan, you do it with the idea of the refinance in mind as well.
Right, and most people don't realize most apartment buildings are owned by mom and pop who own maybe one or two buildings, if that. And it's these people who have saved for years to purchase a property to help with their retirement. So it's
Yeah,
not necessarily, a BlackRock who owns tens of thousands of
yeah,
units. It's mom and pop who aren't necessarily
yeah.
financially savvy. So that's where we're at. Well, our
Exactly.
time has come to an end, but I wanted to thank you again, Arlen, for coming out here today and educating us on the financing world and for commercial real estate.
Thank you.
You and I have worked out a lot together, and I look forward to working with you in the future. And
Yeah.
if anyone wants more information, we will have a link to Arlen's website and some social media and whatnot, and you guys can find out some more.
Alan, thank you very
Of
much.
course. Thank